All right, hey everyone, Mark here. Thanks for joining me for another Greenbridge Investing Market Analysis. It's a live stream, so I appreciate you spending the time with me. Hey Shay Shane, good to see you. I know it's been a little quiet. Hey HS, good to see you. I'm going to spend a brief amount of time here on Bitcoin. So we'll talk about this situation, and then I want to spend most of the time on your questions. So if you have questions about, the stock market or particular stocks, just please share them in the channel now, or altcoins, just make sure you put USD after it, and I want to spend time on that. I mean, really, not much has changed in terms of the general environment. So I'm going to talk about Bitcoin. I do want to touch on the stock market real quick, and then I'm going to move on to your questions. Okay, so with that, let's get started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. Also, if you like the stream that I'm doing, please press the like button. Also register for the channel if you're new here so that you can get an email notification every time I do one of these. All right, so let's talk about Bitcoin first. Hey, everyone, good to see you. David, nice to see you. XNT, hey, nice to see you. Thanks for joining me. So here's Bitcoin, right? And as you can see, right now we have this inside bar developing. All right, right there. See that? I'm going to make it nice and big so you can see. So that right there is a potential buy signal. Now, if this thing closes this way, and the next candle, at 7 p.m. or 8 p.m. Eastern time, whenever that candle is, takes out this high of 58,145, that would be the buy signal. Now, the reason why I'm not going to send that out is because I don't like this location. I don't like it. Now, we do have a higher low in place, and there's a chance that we break out from here. It's possible, okay, with that higher low. I mean, theoretically, we should see the higher high, but this location has been tough, and the reward risk is just doesn't make sense to me. It doesn't mean that it won't go, but this I would classify this as a very aggressive trade. Okay, so I'm telling you right now, for those that are listening in the chat, if you want to take something like this, okay, I'm going to give you the levels right now, okay, because I'm not going to send out the text in the email. The buy trigger, the buy stop would be 58,145, or actually a little bit above that. So like 58,150 or maybe 58,200, just to give it a little room, okay? The stop would have to be like around 55, let's see, 55, 250, maybe even 55 even, 55,000, just to give it some room. Now, there's a good chance that it gets stopped out. I'm just letting you know right now. People want action, but they don't like to get stopped out. So I'm just letting you know. That's why, we have, when we're calling signals, we have to keep in mind, we have to be cognizant of the fact that we have many followers, and a lot of them are new to this. So we can't just throw every aggressive signal out there and say, hey, whatever, it's your problem. I mean, we do have to be mindful of that. So that's why I wouldn't call this, okay? But again, I'm giving you the idea. As far as where this thing can go, this thing needs to then close above 59.8. You need to see the 60K area pretty quickly, all right? And then if it's going to go, you should see a clean break, around that 61, and you should see a nice vertical candle there. That's what a momentum breakout looks like, right? The vertical candle should look something like this, okay? Up in this area, it should be pretty straightforward. If you don't get that, and instead you get another bearish candle, a bearish reversal candle in this zone, it's probably faking out. So, as far as targets 1, 2, and 3, I mean, you have to look at the reward risk. In this case, you're looking at 58,145 to a low of 50, what is that? This low over here, 55. So you're looking at about 4,000 points of risk, right? I mean, that's what you're looking at. That's the proportion of the market. So you need to make at least 4,000 points to justify this, right? So if you're getting in around 58, whatever this is, 58.2, then you have to add 4,000. So you're looking at 62, all right? 62.2 area, that would be where target one goes. If it can't get there, you're going to have to make the adjustments. So again, I'm just letting you know. That's how I would look at something like this. Target two, of course, you could look at around that 66.5 area. That's the next inflection point. And then target three can even be as high as 70,000. All right. I mean, those are all-time highs, but it's within reason. It's within proportion. I don't know if it's going to get there, but the market is strong, right? There's nothing bearish about this. And this consolidation may lead to such a breakout. So I'm just letting you know now, that's an idea for you to consider. All right. What I'm waiting for, The trade that I would send out is the test of the low range, the range low support. That's what I want to see. And Bitcoin may not produce that, but if it can, or maybe test somewhere just a little lower, maybe in that 53 area, maybe 54 area, something like that, and then give me a reversal, I'd be much more interested in sending out something like that. The reward risk just makes a lot more sense, and the market doesn't have to work as hard for me to reach at least target one. Okay, so that's what I want to see, and I have the patience and I have the discipline to wait for it, because I don't care if Bitcoin runs to 70K without me. I don't care. I do know that there are always more opportunities, and that I don't lose money by missing out. So the fear of missing out doesn't affect me. I've seen way too many crazy moves, and I've missed crazy opportunities. So when you've been through all that, you know, you realize, oh, there's just more and more opportunities anyway. So it doesn't matter. Okay. So that's what I'm going to wait for. I'd rather get the higher probability than get the action. So there's just something to keep in mind there. Now, if Andrew, and he mentioned that he may send something out. If he sends it out, great. But I'm just, you know, we don't always agree on the same signal situation. Okay, so that's Bitcoin. That's the situation there. Now let's take a look at, real quick, I want to look at the stock market, all right, because this is also in ridiculous mode, and it has been for some time, right? There's all this stuff with the stimulus and this and that and blah, blah, blah. And as long as this market has stimulus and that type of confidence behind it, you're going to see this type of price action. I mean, this is it's very slow grind. Very hard for swing trades. The reason is the risk is just too high. I would hate to be buying a bunch of stocks when the NASDAQ is near its peak. And if the NASDAQ, you know, pulls all the way back to 13.2 or 13, all the stocks are going to get hammered, right? There's no reason to get stopped out of 10 stocks. There's just no reason. So again, risk first, right? And that's what I always tell our members. That's what I always tell people that ask me, you know, should I do this? Should I do that? Risk first. If the risk is too high, I'm not interested. All right, it's that simple. So, you know, if you turn on the mainstream news, they're going to talk about, oh, how great everything is and blah, 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 and infrastructure this and stimulus that and whatever. But you can't be distracted by that information. That's nothing but noise. And it's irrelevant to where markets will be a month from now. Completely irrelevant. Now, we don't know. Of course, there's no way to know where the market will be a month from now. All I can tell you right now is there's no sell signal, okay, on the NASDAQ right now, but we're getting near this peak, okay, the 14K peak. Now, the NASDAQ can take it out and go slightly higher before it turns. It's possible, but there's nothing in the chart that says it wants to do it right now. So we had some questions in the chat earlier about, you know, shorting the NASDAQ, and someone mentioned it yesterday, you know, just trying to hold back from shorting it. And that's fighting against logic, really, right? Because logic or conventional wisdom says, well, the market's too high, right? I mean, how much higher can it go? It has to pull back. Yeah, sure, it has to, but when it wants to. That's where the irrational part comes in, and you have to respect the irrationality of the market, because it's going to do whatever it wants to do, no matter what you think, no matter, I can't go much higher than this. I can't tell you how many times I had that opinion, okay? And, you know, I'd get short because I thought I knew better, and the market would just keep going higher and higher and higher. So I want to see a sell signal if I'm going to do something with this. All right, like I'm interested in doing the SQQQ again. We had to get out of that position. I sent out the other day. We got out of it because I saw it broke through this zone, which it should not have done if it was going to be weak. And so that's it. We took the loss, and that was it. Now, can I get back in? Well, when I see the right price action, I'll be open to it if we're at a decent enough level. Will that be an aggressive counter trend trade? Yes, but I'm willing to give it a try again if I see the right signs. But I have to wait. Okay, like I explained earlier to someone, I'd rather miss out on the best prices and at least have momentum going my way. So I'd rather wait for confirmation. I won't get the best prices, but I'd rather have the market going my way than going against the market and just getting stopped out anyway. Okay, so that's the thing with the NASDAQ. The S&P is in a similar situation, right? The S&P is making new highs, and this is what's going to get everyone excited. This is what's going to get all the mainstream news outlets and S&P, wow, all-time highs, blah, 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 right? You know, because they like to just, that's what they do. So this is not a good place to be buying stocks. It's just not. This is not a support. and it's not a bottom. Okay, so it's just a matter of time before it finds that turn. There's just nothing there right now. All right, so the point that I want to make before I switch to your questions, because again, I want to spend most of my time on your questions here, and I appreciate everyone's questions. You know, there are times in a market where it's best to just stay out. No matter what the market is doing, there's just no advantage. There's no opportunity. All right, opportunities are infrequent, high quality opportunities. Now you get these people, like I saw a YouTube title, Bitcoin gonna 10x like tomorrow. I forget what the full title was. I'm like, people actually believe this? And it had thousands and thousands of views. And I'm like, man, you know, Bitcoin's not gonna 10x over the next few days. I know that, but that was the title, okay? And people eat that stuff up. Okay, fine, whatever. My point is, there are times in a market where it's best to do nothing. I know it's hard to understand, especially when you have all these day trader people bragging about their returns. I can understand if you're day trading, but we're not day trading. So we're talking about swing trading, and you have to wait until things are better in terms of probability. That's just not this time, okay? So, you know, staying out, you don't lose, and you're being defensive. There's nothing wrong with it. Even if the market keeps running away and running away, you can't lose if it just keeps running away. But if you keep taking trades and you catch the top, well, you know, it's going to be painful and completely unnecessary. All right. So just wanted to mention that. Now, let me get to your questions. I appreciate all your questions. Let's see what we have here. So, hey, Karthik. All right, cool. I have an open position in BNB. Do you think it has room to go higher? All right, let's take a look. So Binance Coin, right? BNB USD. I know that this one's been like, you know, pretty strong. And at this point, you're in it. There's no sell signal, okay? Would I buy this thing now? No way, but you're in it. So that's good. The support right now is this level here, right? Old resistance, which is 347, basically 348. That's where if it pulls back, that would be a place to at least consider taking risk if you were not in. But if you're in, I would just give this thing a chance, right? Until a sell signal develops. Right now you have a nice strong green candle. The candle before it tried, okay? Red candle, but look how that candle played out, right? And this is what helps you stay in the position. You had a red candle, but you never took out the low of the red candle, all right? You took out the low of the previous candle, but that was not a red candle. So you took out the low, you did not take out the low of the red candle, and it reversed in everyone's face. So fine, hold on to it. The sell signal would be you take out the low of the previous candle, which is 371 in this case. Another thing you may consider is a trailing stop. Now sometimes when these things really start to get out of hand, like this candle over here, for example, you can't really use a trailing stop on that, not on this time frame, because it's not going to be very practical. Okay, so when it starts to really run away, if you happen to be in it and you really want to be more conservative, then that's where it would make sense to look at something like an 8-hour chart or even a 4-hour chart. So if I go like to an 8-hour chart, for example, of this thing, now you go 2 candles back, okay, and you look at that low, which is what, 371 area. I mean, you can put a trailing stop there, possibly, and just let this thing do its job. And as it keeps running, you know, you just trail it 2 candles behind on a slightly smaller time frame. Okay, and now again, the advantage to doing something like that is if the move is very pronounced and there's a lot of momentum, you'll capture more of the move. But when it turns, you're not going to get out near the top. Okay, everyone wants both. They want to capture the whole move and they want to get out at the top. That's not realistic. So it's either one or the other. And if you want to try to get out near the top, the only way to do that really is through putting a limit order, you know, in front of the market in advance. And the market may stop there, the market may go higher. So, you know, getting the top is like gambling. It's a random situation. There's no point in trying to get the top. The point is to try to justify your risk is what the goal should be, not to sell the top. So if you risked 10 points and you're above 10-point profit, hey, you're winning, right? That's what you should be doing. If you're up 20 points, great, that's 2-1. You should take some profit. If if it goes 30 points your way, hey, that's 3-1. That's like a home run, right? That's great if you can get to those reward risk ratios. All right, so cool. Thanks for asking about that. Let me see what else I have here. Well, Anna, you're in Sicily, man. Wow, that's nice. I heard it's nice. It's nice. There must be having some nice weather there in Sicily. Oh, okay, cool. Is that where you're from? Anyway, thanks for joining us from Sicily. Can you take a look at FCell, ADA, and CRISP? Sure. Okay, let's take a look. So let's begin with FCell. All right, now this is a nice chart. Okay, I'll tell you why. Now Anna knows because she's been following us for a while. But let's talk about this chart here because some people will look at this and they won't understand why this is a nice chart. First of all, you have a beautiful bullish trend. Okay, broader bullish trend. I like it. That's good. That's a broader sign of strength. Now you have this corrective situation. Okay, that's not a bearish trend. It's just a pullback. All right, and it went into this corrective consolidation within the structure of a broader bullish trend. Okay, cool. I like that. And that's what I like about it. The context is generally bullish. Now, the next thing is we take a look at this price action and the level. So we have it tried to double bottom previously and it didn't go very far, and now it's about to test that low again. So this is an attractive level, all right, this area, which is what, $12. So I do like the location. You have this support behind you here, which is good. The candle, though, is not favorable right now. So this is definitely a good one for the radar because it has no confirmation. So confirmation would come in the form of a bullish candlestick, a pin bar, like a bullish pin bar, perhaps an inside bar, and then you take out a previous day's high. That would be a buy signal off of an attractive area. So we don't have that right now. Okay, we just have the attractive area. So this is good to watch for a swing trade. Now, the other thing to keep in mind is, something like FCell may do its own thing. It may not be as highly correlated to the S&P. But what I don't like is the S&P is on its all-time highs and FCell is fooling around near a support. Not very good in terms of timing because what's this thing going to do if the S&P has a pullback? I mean, the S&P is like moving up like 10 points a day or something. It's barely moving. It's going slightly higher, slightly higher. What if the S&P has a 100-point pullback? That's a lot for the S&P. What if it has a 200-point pullback, over a couple of days? What is this thing going to do? Right? So, and that's the situation where I'd keep a close eye on this thing, right? That's why you don't want to jump in too early. If the S&P has a decent pullback and this thing refuses to break the supports, then it's a long, okay? And even if it's trying to break below, what is this? Like 11.5, around there, trying to break below while the S&P is pulling back and this thing just can't break, then that would be the sign of relative strength. That would really point out, the hidden strength that people are missing. And that would be a very good long candidate at that point. Okay, so I would keep it an eye on it for that reason, but watch it relative to the S&P. Like I said, it doesn't have to have a high correlation. If the S&P and NASDAQ and everything, if they pull back hard, everything pretty much gets affected. And it's just like it's just a matter of catalyst, right? It comes out of nowhere. And that's the risk when you're buying into market peaks, right? So that's something you have to keep in mind. A lot of these stocks, you can't look at them in isolation. You do have to consider that context. Okay, cool. So let me take a look what else we got here. ADA. So ADA, Cardano. We all know about Cardano. Here's against USDT, right? It's the same chart. Now, so this is a pretty clean-cut consolidation, right? That's a pretty straightforward consolidation. Broader trend is bullish still. You're fooling around in the middle of the range, okay? I know there are a lot of coins in this situation. The range low is right here, which is $1, basically $1.02, but you figure that dollar area, that dollar whole number area, that's your most attractive area for Cardano if it can retrace to it. Buying it right now in the middle, it's a 50-50 proposition. It might go higher, it might go lower. Look, if you bought previously in the middle, it tried to go higher, and if you didn't get out, now like it's just consolidating. It's not doing much. There's a lot of risk that you take in this situation because again, I'm not very optimistic about this space. Okay, and it's not because I'm just not optimistic. It's because I don't like the amount of hype that's out there. I don't like I mean, everyone thinks it's like a sure thing. That's a red flag for me. Now, look, I'm a contrarian. I'd be much more comfortable with these if they broke their supports and started shaking people out because I know that's where the opportunity is. But it doesn't mean I'm right. Okay, it is a consolidation, and consolidations are typically trend continuation patterns. So it may break out. Some news can come along. Remember, they have a long list of all these things that they're going to accomplish. maybe they accomplish something and it breaks out that, this thing may go higher, because the trend is not bearish. All right, it is bullish. But if Bitcoin has a serious retracement, which it has not had, but if it pulls back to like 40K, I'm very curious to know where these things go. All right, because most of them are not trading on their own. So just something to keep in mind. So to summarize on Cardano, not a good spot for a swing trade right now. I'd rather wait for a test of the range low if it could provide that opportunity, or you're looking at the potential breakout. You have to decide how you want to handle something like this, if it's going to be a swing trade or something more than that, like a position trade. Then, as you know, you can take a small bite at any price. It's just a matter of accumulating more depending on how this thing behaves, right? That's really how you manage the risk in that situation. So thanks for asking about that. The other one here is this one, CRSP. This is one of those gene biotech stocks, whatever. It's a mover when it moves. Now, look, broader trend was bullish. Okay, nice. Now, it's formed this, it had this pullback, okay, shook a lot of people out. Now, look at the situation now. Not as nice as that other chart we looked at, not as nice as FCell, but it's got a similar idea, okay? It's forming a consolidation in an area that's more attractive. You have a range low support right here, which is $106, right around that area. This thing right now is at 120. So that's a big difference. Okay, I mean, I would not want to buy like 100 shares here and then watch it go to 106. That's just not for me. So I don't like this location. The risk is a little high because again, you're like right in the middle of this range. So in this situation, I'd prefer to wait for the support. Okay, in that 106 area, maybe 110, and then look for a push off that support. Again, these are these 50-50 areas. They're tough to deal with. They may work out, but you have to understand over time, I want higher probabilities, not 50-50. 50-50 is the same as a slot machine, okay? I mean, actually, a slot machine is probably worse than that. But my point is, it's the outcome over time is going to be more mixed or more random. I'm not really interested in that. So I'd prefer to wait. And hey, sometimes, look, these things go from here and it has a nice run. I miss it, but I don't care because I don't lose anything. So just something to keep in mind there. You have to decide how you want to handle that. But I just don't like the risk of based on where it is right now. And again, we can't forget where the broader market is. These things should be a little stronger, in my opinion, compared to how they're behaving right now. Oh yeah, Blink, BLNK. Nice, right? This Blink was BLNK. This is a trade of the week that we sent out like 2 weeks ago. Is this thing target 2 yet? 46.39. So no, it went through target 1. I saw that earlier. Yeah, these trades of the week. They don't all work out like this. We've had plenty of stop outs, but hey, when they work, they work. Blink is just a nice situation, and hey, it's following along with the market. So this is a nice example. I'm glad you bring this up because as you see, the Nasdaq is strong today, right? The S&P, and look, this thing is up 5 points, 529 or whatever. Why aren't those other stocks doing something like this? So this is really how your stock should be behaving in this environment. I wouldn't buy Blink now, right? We bought Blink back at what, 38. So, that was a few weeks ago. And that's, now the market is doing its thing and we can sit back and benefit from that. We still have 2 more targets to go, but hey, at least it's going the right way and we've reduced our risk by 1/3. Okay, so thanks for that. XNT says he has OMG long. All right, at what price? Let's see, at $7.40. Can you please expect the profit targets based on the current price action? Okay, so let's take a look. OMG USD. Oh wow, this thing's starting to go, right? This thing, I mean, for the longest time, this thing was just consolidating. Now, here's a good example. Let me just point this out of a situation where, consolidated for a while, and really doesn't look very eventful. And then it changes and does this. Okay, so that can happen out of a consolidation. It never went back to its range low. All right, never went back here. And that could be a missed move if you wait for that range low. But that's okay. Again, you don't lose anything in the missed move. Now, his question is about profit targets, okay, based on this price action. Well, let's see. First thing I do is, well, I don't see. Let me go back. I know OMG has more price history than this. Let me go back here and find another exchange. Hold on, because the first thing you want to look at is historical support and resistance. Let's check out Binance. Okay, yeah, there we go. So we go back, right? We go back in time. There we go. There's all the ridiculous price action from 2018. So that is gonna, even though that's years ago, the levels will still have an effect because traders have a memory, and there's people still stuck in from some of these levels, right? That's why the market will react the way it does. So let's look at some of these levels back here and see where we are relatively speaking. So these are some inflection points that I'm noticing, right, from at that time. And here's where you are now relative to those inflection points. Look at how you get the tail off of that one, right, close to it. Right, 9, what is that? Just over 10 there, right? And the price gave it up pretty quickly. That inflection point is clearly still in play. Everyone recognized it, and you see how the price action reacted. So to answer your question, you get another test of that high area. That would be one good place to get out of some. Hopefully, if you're in from a good price, XNT, you should get out of some now, okay? It's always a good idea to lock in some profit when something goes vertical, especially when you see a pin bar. Take something off the table now. You're not going to top ticket. You're not going to get the top. And people get angry or they get whatever. They feel bad because, oh, the thing I got out here and it doubled. Hey, you don't know that is random. All right. So if greed steps in, which often it does, you have to have the discipline to not let it affect you. By taking profits and being in the habit of taking some profit while you can, there is going to be those times when it runs to a point and you get out of some and it gives it all back and you're like, wow, I'm so glad I got out there. So you have to keep that in mind, right? It's about the habit that makes you consistent over time, not the profit that you make. So to answer that question again, I would say any test of this tail, this long tail, I would get out of some, or you should be out of some now, right? Lock in something. If it breaks through that inflection point, the next area you're looking at is around 15. Okay, will it get there? I don't know, but that would be a good profit target. So that would be another place to consider. All right. Otherwise, I mean, beyond that, I mean, it's kind of pointless to go beyond that because then you're looking like way up here, which is why it's about $20. So if it starts, if it starts to go and there's no sell signal, you just hold on because again, and you wait for a sell signal. So let's say you split up your targets, you split up your position in thirds, right? You've locked in 1/3, you're gonna put another third for sale, like at one of these targets, okay, if it can get there. And then you hold on to your other third to see how far it goes. When you get a sell signal, right, that's when you should really consider the adjustment. Right now, you have this bearish pin bar that's established. You have an inside bar forming today. If it takes out the low of this bar, which is 899, and it takes out the low of the bar previous bar, which is what, 861. So basically 8.5. Takes that out. That's a sell signal. So that would also be a good prompt to not get out of the entire position, but it would be a good idea to get out of more and reduce your risk. Okay. So I hope that helps. And you're in from 7. You said it was 7. I mean, that's a great price. That nice trade. Okay, could you have a look at GDRX? Oh yeah, this was another swing trade. This was another trade of the week. Now look at this one, right? I must have sent this out like 3 weeks ago or something like that. This rectangle right here represents the target zone. Look how close it came to it. The high of the target zone, the highest point was 41.79. Our first target was 42. Okay, so that's the market. In this situation, this is a sell signal. Okay, so you took out the low, 40.05. You took out that low. This thing is at 39.61. A sell signal is in play. So, you still have some green in this if you're in it from 38. It wouldn't be a bad idea to at least take 1/3 off the table. All right, at least reduce your risk. Again, this really shouldn't be behaving like this in such a strong market. If the market pulls back, where is this thing going to go? Okay. Now again, this is not a high S&P correlation, but still, usually most stocks are affected if there's a dramatic sell-off. So these things should not be acting weak today, and this thing's acting weak. So I think it's a good idea to reduce risk by 1/3, or if you don't like the idea of it going all the way back to break even, then maybe get out of 2/3 and see how it goes. Remember, this game is about managing risk. Okay, so just something to keep in mind there. And thanks for bringing that one up. DJ says traded from March 24th. Thanks, DJ. My fact checker, DJ. Thank you. March 24th, we sent that one out. Okay, I sent that one out. So it's been in play for a few weeks. And look, who knows? This thing may develop a higher low somewhere along the way and then go for another leg higher. That's possible, but it's not there right now. That's why, you know, a lot of this is like a personal choice. Do you want to give the market a chance to do that? Because remember, markets are highly random. Just because a sell signal is in place doesn't mean it's going to go all the way back to the support. But at the same time, you want to adjust for that potential scenario. And how do you do that? Well, you get out of some, right? And you reduce your risk. So just something to keep in mind there. Thanks for bringing that one up. Karthik, many thanks for... Oh, no problem, no problem. Okay, cool. I think Anna is on vacation after... Oh, yeah, that UPST, that was a Henry Rains call. Man, I think she made like triple her money on that or whatever. That was a nice trade. Ian, hey, nice to see you. Okay, the PI cycle, okay. PI cycle, okay. PI cycle. Can you explain what the PI cycle, explain what that is? Because I don't know what that is. I don't follow it. I don't follow moving average crossovers. And I don't see stuff like that. I don't go by stuff like that. Things like that, you have to understand. Anything with moving averages, they're good for trend, you know, trend following, but they're not going to really be very useful when the trend is changing, all right? Because again, they're backward looking. So that's why I put more weight in the price action. Now the broader trend here on Bitcoin is bullish, right? So it doesn't matter what any kind of crossover says, this is still bullish. If you're looking at a smaller time frame, or if it's looking at smaller periods, smaller amounts of time, it's going to get mixed up in these red candles. Okay, so I wouldn't be distracted by that. Bitcoin, it's tough to say if this is a top. This is not how price action typically behaves at market tops. All right, to be honest, usually a market top, if there's a serious resistance there, price rejects it quickly. All right, and I'm not seeing any quick rejections here. We got some rejections, but supports are holding. Not one support has been broken. Okay, no major support. 50K is like the major support right now, and it just not even close. So that's why I don't go by any opinions. The market needs to provide evidence, and then I can adjust from there. So thanks for bringing that one up. So based on what you say, I'm bullish on Bitcoin. I just don't like the location as far as putting on a new swing trade. I just think the risk is high. That's all. Okay. Can you please look at DXY? Sure. Dollar index. Okay. I've been looking at this carefully. This is a very interesting piece of information because wherever this thing goes, wherever this thing decides to go, it's going to have an effect on the entire financial system, right? It's the US dollar against the basket of other currencies. Now, recently it's been trying to find some strength, trying to imply that, you know, interest rates want to go higher, right? That's what that is. If you look at the bond market, right, the bond market has like an inverse situation. If bond yields, as we know, if bond yields go higher, that's stronger for the dollar. Bond yields have recently started to fluctuate lower. Okay, I'll show you that US 10 chart in a moment, but here's the thing with the dollar. The question that the dollar needs to answer, because this structure that I just put this box around, that's a bullish structure. But is that a bullish trend? What is a trend? Well, we have to look at the bigger picture. Okay, people forget to look at this. That's not a bullish trend in the eyes of the bigger picture. That's just a retracement. Okay? So you can't lose sight of that. This thing may still be in the bearish trend, the broader bearish trend. But the only way I'll know, Okay, the confirmation that I need is the dollar needs to start taking out supports, right? And the nearest support on this thing is around that 91 area, 90 area. It needs to take that out. If it takes that out, then that's confirming that we're probably still in the bearish trend, which is in line with the inflation or the hyperinflation scenario. Okay, it's probably why gold, you're seeing gold start to get, gold is starting to pick up. On top of that, you know that gold is going into a seasonally high demand time. So I'm not surprised that we're seeing gold back at 1750. I mean, we've been bullish on gold all the way to that 1675 pullback, right? And we really tried to help our members stay in that, even though it was painful. But, you know, you have to stick to your plan sometimes, and you have to recognize the bigger picture. So if we're in that inflation environment, now, I don't make decisions on these broad opinions, right? Like, are we in inflation? I believe we are, but if the market, whatever the market tells me, I just go by the market. I don't go by these broad economic opinions that a lot of times are irrelevant anyway, right? The market doesn't care what we think. So my point is this: if this little mini trend or this little corrective move stays intact and we find a higher low and we go higher, then that's going to imply higher interest rates, okay? If we break that support instead, then we're looking at the inflation scenario. Okay, the inflation scenario means we're going to see higher prices and everything, right? You're going to see gold, Bitcoin, stocks, everything's going to be going higher, and everyone's going to be having a party with all the free money that the government is handing out to everyone. Okay, otherwise, if we see the dollar go higher, that's going to be a negative for the stocks and pretty much everything that's anti-inflationary. And gold will probably feel some pain. But remember, gold just doesn't react to just the dollar. Gold has its own things going on. So that's why I wouldn't be worried too much about gold. Even if it pulls back and starts to get people nervous again, there's a physical shortage, and we can't ignore that. You know, I'm not going to get fooled by the paper stuff when there's a serious physical shortage of these metals. It's just a longer term play, and you have to practice. You have to just be responsible with your sizing in order to ride out those tough, irrational movements, or technical corrections, as one expert called it. Anyway, so that's the dollar situation. Very, very important, all right, to keep an eye on that, especially for Forex traders or pretty much anyone, right? Stock trader, investor. Here is the bond market, 10-year note, okay? The treasury bonds, right? This is the bond prices. Look what's happening here. So as you saw, the bonds recently have been in this bearish trend. Over the long run here, going back, right, a year, whatever, I mean, it's been generally bearish, right? So bearish prices, bearish bond prices means yields have been, you know, held up. Now, what's going on here? We have this double bottom that developed very recently. So someone's buying bonds, right? Maybe it's the US government, whatever. Someone's buying them, and they're holding this thing up. But here's what you have to keep in mind. Just because there's a double bottom doesn't mean it's a trend reversal, okay? So we can't jump to that conclusion. We have to look at this resistance right here. Now look at the bonds today, right? They closed, it looks like a pretty strong candle right there. So, okay, that implies what? Lower yields, but this trend hasn't changed yet. So this high over here, this is what we need to keep an eye on, 95.24. We clear that high and we start pushing above it, that would be a momentum change, okay? Maybe not necessarily a trend reversal, but we will have a momentum change. Maybe this thing goes into a range. Maybe this thing starts to build a bullish trend, but I can't jump to that conclusion. The market needs to prove it. Right now, based on this structure, based on that resistance, I have to assume that the trend is still generally bearish, okay, until this thing proves otherwise. A double bottom is not enough proof. So we'll keep an eye on that. But again, this is an important thing to keep an eye on for everything, right? Because if this thing breaks out, that means the dollar is probably breaking supports, okay? So just something to keep in mind there. And if this thing goes back to its lows, that means the dollar is probably going back up toward its resistance, and that would imply higher interest rates, okay? And I would expect the stock market to also be feeling some significant pain in that scenario. Okay, so thanks for asking. Great question. I spend a lot of time on these particular markets because they're so important to keep an eye for bigger picture stuff, right? All different pieces of the puzzle. You just have to know how they fit in. So, okay, no problem, Karthik. Let me see where I am here. Okay, so that was Ian, Robert, your question there. All right, let's see. Nito, CRV USD bought a few weeks ago at 325. Okay, all right, all right. Hey, no problem. Let's take a look. Okay, CRV. Now look, Nito, I'm glad you bring that up because there are a lot of people that are stuck or they bought when things looked their best back here or whatever, and then they get stuck in the consolidation that follows because they don't realize that a consolidation is more likely to follow. So let's talk about your position here. You said here that you are in from, let me just look at your price, 325. All right, so let's highlight that price on the chart here. All right, so 325 is like right there. Ooh. All right, yeah, that's a tough area to be long from. Now here's the thing. So the general trend is bullish, right? There's nothing bearish about this trend. So okay, that's a good thing for you. You're right now in this consolidation, okay? Which again, that's actually a sign of strength if it can hold. Because typically a market that's weak or a market that's going to reject resistance doesn't consolidate there, it rejects it and goes back to support. This thing is not rejecting it very well, right? Just like Bitcoin, it's lingering. Lingering like that is a sign of strength. So look at the current candle. So you have this higher low situation, right? This little mini double bottom area right here where you're fooling around right now. You have an inside bar. You take out that inside bar high, basically you give it a few extra cents, like 315, something like that. I would expect this thing to be going for the breakout. Now also, I would expect Bitcoin to be doing something similar because this looks very similar to Bitcoin. So if Bitcoin breaks out, I would expect this thing to at least try. So in your situation, you're in it from 325. This thing is at 299 right now. See if it can break out, okay? And if it breaks out, if you have a lot of it on and you're uncomfortable, it would probably be a good idea to just reduce your risk, right? And who cares if it runs to $5 and I shouldn't have got out of any. But the thing is, it's about reducing the risk because what if it just tries to break out, Bitcoin fails, and this thing fails? So here you are, you're going to hold this thing because it's going to double because, you go to your favorite guru and he says it's going to double, and then you get caught in the false breakout like it's done before, and then it goes back to $2, right? So you don't want to get caught in that. So the effective thing to do is if it goes for the breakout, which is on your side, I mean, that's a probability that's within reason, then it would be a good idea to reduce some of your risk in that breakout attempt and then let it ride. Okay, see if the breakout follows through. If it doesn't follow through, you get a red candle in a failed breakout area, which would be way up here somewhere, in the high 3s, maybe low 4s, then at least you have the choice to reduce your risk more by exiting more, or something like that. But that's going to be up to you in that situation. Okay, so what you should be watching for is the failed breakout. That's when you really should be acting on it after you reduce some of your risk. All right, otherwise let the market do its job. So not horrible, it's just kind of hesitating right now. And what you don't want to see are these supports get broken, okay? I mean, you're at a minor support right now, so that you may fool around a bit in these lower 2s, but this is what you don't want to see. You don't want to see this range low get taken out, which is around 209, something like that. You start pushing that establishes this area up here as a double top. That would be bearish, okay? Not necessarily a bearish trend, but this thing may break that support in that scenario. And that's when you don't want to get caught holding on to it. It would probably be a good idea to take your loss in that scenario. Otherwise, again, a lot of people have a lot more confidence in these things than they should. And a lot of people are going to get stuck holding these things when they break important supports and they go back into their garbage zones, which we saw for like a year and a half, 2 years on a lot of them. After they had all their hype like 2 years ago, and then they pulled back into these. I mean, some of them practically went to zero. Okay, and you don't want to get stuck in that. Okay, so just keep an eye on that support. So thanks for bringing that one up. Let me see what else we got here. Karthik, is there some time? Please answer one question. Would you move the stop loss? Okay, so Karthik, which one are you talking about again? Can you just remind me? You're talking about, I forget which one you're talking about. Let me see. Let me just look back on the chat here. Oh, BNB. Okay, so your question about BNB, would you move the stop loss after? Okay, so would you move the stop loss? Would I move the stop loss after reaching the first profit target? It's not a bad idea because why? You're reducing your risk. So you want to move your stop loss to break even, then okay. But just keep in mind, there are those times when it goes back to break even, you get knocked out. But at least at this point, you've locked in some profit, so it's not a loss, okay? It's still a win. You just locked in less profit. But it's not a bad idea, all right? Now, if the market keeps going, hey, great. At least at this point, if you're putting your stop at break even, it is then a risk-free trade because you're not giving back any money in that situation. You're only giving back profit, which is not yours to begin with, right? Unless you take that profit. So thanks for that question. Okay, cool. I'm just catching up on this chat here. Kavi, can you please have a look at KC? Coffee and gold. Okay, KC. So he's talking about the commodity. Let's take a look. I usually don't get questions about that one. So that's interesting. I'm going to guess I can see the futures. So let's take a look at the futures. Now they'll keep something in mind. These type of instruments are going to be very sensitive to inflation, right? If there's inflation, these things, because the dollar will get weaker and weaker against them, they should be strong, just like gold. So what's going on here with coffee? Well, general trend is bullish, okay? You have this nice support, this area right here, nice support around that 122 area, right in that area there. Again, I'm looking at the futures here. So, I don't know if you're looking at something different than that. But here's the thing. You're in the middle of this range. So this is not a good place to buy it if you're not in it. Because it may form another lower high. If you want to buy this, you probably should wait for the range low. Around those low 120s, 123. Because then you could put your stop around like maybe the 118 area or 120 area, something like that. Because really, if it's going to hold, it shouldn't go below that. This thing can turn into a lower high. That's why you don't want to buy it here and then it breaks that support. That's a lot of risk. It's unnecessary. So the general trend is bullish. I would wait for that support. Or maybe you get a higher low. Okay, maybe it finds some support around 125 and gives you a signal. Okay, that would be acceptable. But not here where right now this thing's at 129, basically 130. So I would hold off on that. General trend is bullish. You have this recent corrective move, but you can't not lose sight of these higher lows that are all over the place. Okay, and this again, this will be affected by the dollar situation. So again, if that dollar gets stronger and the dollar holds its support and looks like it's going for the higher high, I would be expecting this to take out its supports. Okay, let's take a look at gold. All right, now gold again, it's going to be a similar situation. Now we're long gold. You could see the swing trade I sent out like a week ago on gold. And we've been very slow, just to let everyone know, our members here. We've been slow on sending out trades. The reason is, again, like I said before, sometimes you have to know when to stay out of a market. And there's no point in forcing trades just because people want action. I mean, what would you rather have? A lot of action and mixed results and a lot of losses? Or would you have less action, but when a trade comes along, a higher probability of it producing the outcome that we expect? I'd rather go for the higher probability ones, right? So I just ask for you to be patient. Our members out there, please be patient in this environment. I mean, we are keeping an eye on things, but we have a lot of members, and I don't want to sit there and put out all these aggressive trades and watch everyone get stopped out. It's discouraging. It hurts confidence, especially of newer people. So I'd rather have you wait out the market and not lose anything, okay, while we're learning. So I just wanted to point that out. Anyway, so this is gold. I sent this out like a week ago at 1720, and so far, so good, right? Today it's at 1755. We're not in the target zone yet, but I'm confident with this one. For one, like I said before, we see that dollar pullback situation. Okay, that's a positive for gold. We also have gold coming into that seasonal demand, all right, over the next few months. Another positive for gold, all right? So you have those two things, the combination of those two things. Did I make this trade based on that information? No. I made this trade based on the double bottom that developed at 1675. Purely technical. Okay, now the fundamentals happen to be in line with it. Okay, cool. right? And it sounds better, but I really don't care about the fundamentals. It's just nice to have behind you. Here's why I've been bullish on gold the whole time, and those of you like DJ and the rest of a lot of these other people that have been following my gold calls, this is why I'm bullish on gold. You guys know this consolidation since the August peak is just a broad wave 4. I've talked about this a million times, okay? And I also suspect Bitcoin will go into something like this as well at some point. But this broad consolidation shook a lot of people out, especially people who use too much leverage and they overreact to stuff. We sat through all this pain, but this broader corrective move or consolidation is not a bear market. It's just a correction or a corrective move of a broader bull market, okay? The bull market is pretty clear, right? That's bullish, nothing bearish about that. So when you get these corrective consolidations, you really have to be cognizant of the lows. And, we had a couple of stop outs, right? We called gold a couple of times in this area, got stopped out. But hey, we caught it and now we're long. So I'm expecting gold to go higher. I'm expecting gold to go into this target zone. I like the price action. Nice strong close today. It may get a little noisy here and there, but hey, let the market do its job. Nothing to do here, but let it run. Okay, great for gold stocks. Look at WPM, wheat and precious metals. Nice. Okay, this thing started to move before gold. How about Newmont Mining? Take a look at this one. Oh, okay, it's a little hesitant, but it had that, had that sharp move earlier anyway. How about AG? When I sent out that gold trade, I put in the email. I said, an alternative for those who don't want to take the CFD, buy AG. Now, I didn't put specific levels on AG. I left that up to the member, but that was here when AG was here. Okay, so it was possible to get into AG around like the 16s, low 17s, and now this thing is fooling around at 1756. I like AG, a silver miner, not only because it's going to respond well to the gold situation, but it's a low float stock, which means if it goes berserk and goes on all the day trader radars, it does something like this, right? That's why it went to 24, and then the next day was back at 15. It's because it was getting in. It was part of that whole GameStop situation. So when they all pile in, like you could see a sharp move on this. That's why I like it, and I'm open to buying more. Okay, just not at this price, but any pullback on this thing, I'd be open to buying more. All right. Anyway, so that's the gold situation. Thank you for asking about that. Very important part of the market. Okay, Andre, could you take a look at? Okay, so I looked at that earlier, Andre. Someone had asked about that. So if you just go back in the stream. Oh no, I'm sorry. I'm wrong. Hold on. Same letters, different order. Okay. So let's take a look. So here's the situation here. Right. I like that. Right. Generally bullish. The trend before that. Let's take a look. All right. So you have a broader higher low situation. Tried to break out. Gave it back. All right. So now you're in this sort of middle of the range right here. All right. So that makes it a little less attractive. I'd prefer to see a test of the low, which is around 7.25. Right now you're at what, 769? That's not too far away. But that's where your support is. So in a situation like this, maybe you'll say, but I don't want to wait for that. I'm willing to take the risk. Okay. It's still buyable here in my opinion. But if it goes and tests this 7.25 and breaks it, that's where you're going to have to take your loss and see if it, goes to the next support, which is, in those mid sixes there. Other than that, you're still in this corrective type of consolidation, and it needs to take out this resistance here at 838. Needs to take that out to really start proving itself. So it still may fool around in here, okay? So that's really how you have to look at it. Your risk is defined by that low if you think that this thing could break out, but there's really nothing special here about this level. It's kind of like a 50-50 area. And if it can't take out that 8.25, it can be problematic. It will likely take out that support because something that's strong takes out resistance levels. It doesn't respect them. Okay, so just something to keep in mind there. All right, so thanks for bringing that one up, Anna. Oh, nice beach house, man. Nice, Anna, in Sicily. Okay. Let's see. It's an Ian that has located every cycle peak of Bitcoin. Okay, that's interesting, Ian, about that PI. I don't know where to. I don't know where I can find that. I guess I could probably find that if I go through the things on TradingView. I'm not going to do that right now, but I'll definitely take a look at that and see what I think of it. But if it's based on oscillators or moving averages, then it's probably not going to be a lot different than the other ones. I mean, so anyway, if I crossover imminently, you can find this. Okay, I figured. Okay, cool. If you look at it back a bit, the whole massive fractal dollar index seems to be repeating what it did years earlier. Okay, that's a good. So Ian, about the dollar index, you bring up an interesting point. Okay, so you said that it's repeating what it's done years earlier. You may hear this. You may hear this assumption or this thing that people say: history repeats itself, right? In the markets, that's part of technical analysis. But people misunderstand what that means. History repeats itself doesn't mean that it's going to repeat a pattern that appeared 15 years ago or 10 years ago. Okay, people think that. They go back to like 1930 and be like, look, Bitcoin is doing what the Dow Jones was doing in 1930. It's irrelevant, right? It's random. So I wouldn't go by that. History repeats itself means that there are certain conditions, certain situations in the market that repeat themselves over and over. I mean, Elliott wave is an example of that. Elliott wave, you see these waves, right, repeat over and over. An impulse wave repeats, but it doesn't repeat exactly, right? The magnitude is random. It's all over the place. The magnitude meaning you don't know how big the wave is going to be, but the waves themselves, you can see the same pattern repeat, just at different magnitudes. So just want to make that clear. A lot of people, and I even see professionals make that mistake. I'm like, man, this guy should know better. Or maybe they do it just to attract attention and to get people curious. I don't know, but it's random. There's no. It's just a coincidence. There's no value in it. Okay, as far as anticipating what can go on next or what can happen as the market moves forward. So thanks for bringing that one up. All right, let's see. Bjorn, what do you think of XRP? Okay, I'm glad you bring that up. Someone asked about this in our chat earlier because it's been going crazy, right? Henry, when I was on the show the other day with Henry, I showed this to Henry, and he had mentioned some news had come out about their court case or whatever. Came out less bad, not as bad as expected. So it seems to have led to this knee-jerk move right here, right? Okay, so here's the situation with this. Like I said before, because I know Shashank had a piece of this. Shashank, I hope you're still in it. You can't touch this here, okay? It's broken out, and you don't know if this momentum will continue. It's a gamble now, right? This was the breakout area, and not easy to take because it can fail very easily. As you see, it's failed a couple of other times. But look, if you're in it, this is a nice candle to see, especially after that red candle developed, okay? This red candle that showed up after the initial push, the initial breakout, that could be a sign of the pullback coming. But look at what we have now, the green candle right after that. That's good, okay? It's an inside bar. So if the high of this inside bar is taken out at 101, I still think it has some more room to go higher for that momentum to continue. If it can't take out this high of $1.10 and it struggles up there, or you get a bearish pin bar up there, it's probably preparing for that broader consolidation that we've seen so many of these things do. So, I mean, that's how, if I was in it at this point, if I was in it from a good price, I would let it ride. If I wasn't in it, I would not buy it now, okay? Even if this turns into a buy signal. The risk is just too high at these levels. So, by being in from a good price, you have the luxury of being a strong hand. By buying it now, you're now at the mercy of the market. Big difference in how you manage this, right? So if it can break out, great, you're in it. But you should, if you're in it from a good price, you definitely should. And Shashank, I hope you've done this. I hope you lock in some profit, in this area, in this vicinity of these vertical green candles, because that's the herd mentality. And you have to take some profit off the table while all these buyers who are just blindly buying, while they're available to buy. You want to unload some of your risk because they're there to take it from you. Okay, so that's not a bad idea. Otherwise, I'd let this thing run. If it takes out this 85-cent area low, if it takes that out, then it's probably going into the consolidation at that point. So I would reduce my risk more in that situation if you're in from a good price, and then let this thing consolidate, because that's probably where this thing is going. If you're watching like YouTube videos that are saying XRP is going to go to 100 by tomorrow, that's not a good thing. I mean, XRP has been a very this thing has been very it's been a laggard for the longest time. It's I don't know, it hasn't been very good. So just something to keep in mind. Okay, it doesn't hurt if you want to hold on to some for the long run because maybe you believe in whatever they do. Hey, no problem with that. All I'm saying is be prepared for that consolidation that can go on for 2 or 3 months after this thing peaks. But right now, while this momentum is there, try to ride that for as long as you can until the sell signals and lows start getting taken out. All right, so I hope that answers your question. Let me see what else we have here. Okay, so how am I doing with time? Okay, so I'm just about there. I'll be wrapping this up here in a few minutes. So Andre, can you take a look at CANG? Is that a stock? Let's see, CANG. Cango, is that right? This thing is a $8.45 stock. Correct me if I'm wrong, because sometimes, it may be a coin and then I talk about the wrong thing for 3 hours. All right, so if this is right, if this is the stock, obviously this looks like it was one of those short squeeze stocks during that GameStop period there. And look, gave it back, right? That's the clue. I don't even know what the stock does, but when I see that type of price action around that period of time, I mean, that's usually a giveaway. Now, double bottom in place. Here's the thing with this. While the broader trend we can still argue is bullish, right? And it's been kind of flat these recent week or whatever. This is not that good, okay? The reason is it's out of play. If this thing is going to start moving again, I mean, look, all right, let's just look at it this way. The structure isn't very favorable, right? It's very neutral. This is not exactly a nice clean-cut bullish trend. You have a lower high over here at $10 or $10.50, and you have the double bottom, but now it's stuck. So getting involved with something like this is not a horrible price because where are you? At $8.45, and the lows here are around $7.69. You're looking at about a dollar of risk. If it takes out that low, it's probably a good idea to take the loss and get out of this thing. If it starts to go higher, okay, it needs to break this $11 area here, the lower high. If it breaks that, then you should be in good shape because that would be a sign that the structure is now changing again. Now, since this thing has potential to run, that could be a good prospect. But that's what you're looking at in terms of reward risk. If this thing just, if it's out of play for a while and everyone forgets about it for whatever reason, then, it'll probably just do a lot of nothing. So, I really don't know what else to say about something like this. The best you can do is just evaluate your risk and decide if you're willing to take that risk to see if it can realize at least a test of the mid part of the range, which would be around here, around $12. So, you're risking about $1 to try to make 3 or 4. Okay, maybe worth the risk. Obviously, this one's not going to be following. It's not a highly correlated S&P stock. So it is probably more sensitive to company-specific news, all right? But the chart really isn't giving us a lot here besides those support and resistance levels. Okay, so thanks for asking. Okay, so Karthik, stop loss question was in general. Okay, so Karthik, as far as the stop loss goes, all right, let's go back to BNB coin because that was the one you were talking about anyway. But so in general, you're asking about moving it to break even. In general, I don't like to do that because a lot of times it will tap you out for break even, especially if it's too close after reaching target 1. So, I mean, that's why I'd rather trail the stop based on the market structure, right? So like, for example, going back to like an 8-hour chart here, right? Using 8-hour because using the daily may be too steep or too much. In this case, I'd rather, instead of moving the stop to break even because this thing reached target 1, I'd rather, just trail 2 candles behind because that will at least keep me in longer. And when it turns, yeah, it'll tap me out, but I'd rather play that game than watching this thing go all the way back to my stop. But again, there's no right way to do that because again, the thing is, having the stop at break even may be fine because it may never pull all the way back to break even, and then it may go higher and higher and you never got stopped out and you're still in it. But a lot of times I find it goes back to break even, knocks you out, and then it goes higher. So you know, that's really becomes a personal preference at some point. But I rather just leave the stop alone, you know, and see if this thing can go to targets. And if it really starts to go and I have a runner, then I just try to trail it, you know, 2 bars behind. The simpler you could make it, the better. Okay, so Kavi, some technicians draw a trend line through Bitcoin lows at 43K, 50K, 55K. What do you think a break of that trend line would reveal? All right, that's a good question, Kavi. So let's go back to Bitcoin. Kavi's asking about trend line, and now you're saying a trend line, like a horizontal trend line. Let me see what he's saying here. Oh, you're probably okay. I think I know what you're talking about. You're talking about a trend line. You said starting around 43K. So okay, they're talking about this right here. Okay, so they're talking about a trend line that connects this low. Let me erase some to this low right here, right? To this low. And then the next one was, what was that? 55K, right? Around this low. So they're looking at that trend line. And they're probably saying that there's a ascending triangle and blah, blah, blah. I mean, yeah, look, the trend line it's not really the trend line that carries any meaning. All the trend line is doing is graphically representing the higher lows, right? That's what it's doing. So just because a trend line breaks doesn't really mean, it just means that the momentum that was maintaining the border of that trend line, it means that that momentum was still intact. When the trend line gets broken, all that means is the momentum's changing. So it's not, while it could be a somewhat useful piece of information, it's not something to overreact to at all. Because in a market that starts to consolidate, like if Bitcoin decides to start consolidating, which means it breaks that 53K trend line area, right? What if it breaks that? Everyone thinks, you know, that's it, Bitcoin double top, bearish, blah, 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 and they all bang it out, or they all get short, and it finds support at 50K. Okay, yeah, the trend line's broken, but the support at 50K is still intact. And then what does it do? It goes back up. Oh man, oh yeah, the market sucks. I shorted it and I got stopped out. I don't know why. Bitcoin is so hard. Okay, but the trend line just threw you off, right? So the trend line doesn't really define the trend. It's really the levels, right? So I wouldn't go by the trend line. Look at the levels. In a broader bullish trend, supports should generally hold. 50K is the support, and so far I don't see it breaking. So as long as that support is in play, I don't care what the market does between here and 50K. Okay, it's still generally strong. We don't short Bitcoin, as you know. So, you know, a buy signal could develop. Now, if this buy signal develops inside this resistance, it's a very tough one for me to take. So I'd rather just miss it, right? I know some members are going to be upset about that, but that's just, you know, I'm just more conservative that way, and I'm not going to send that out if it breaks. Okay, so that's why earlier in the stream, I laid that out for you, and that's up to you. Okay, so anyway, thanks for bringing it up. That's a great question. All right, so no problem. All right, Kavi. So I'm going to wrap this up now. I'm pretty much on time. I don't want this thing to run too far along. I want to thank you all for your great questions and your participation. Again, if you like the video that I'm doing, please press the like button. It gives me valuable feedback. Also, you know, I do stream on Mondays as well. So you could check that out. I've been simulcasting onto TradingView on Mondays. I get lots of questions, so sometimes I can't answer them all. Make sure you check out Greenbridge Investing. All the links are in the description portion of this video. If you click on the show more part of the video on the bottom there, you can find the links and all that stuff. We have a 7-day free trial to the signals, and we also have the free chat room and our paid chat room. But again, I have to tell you that we have not had a lot of trades in the recent few weeks. And I know some people are concerned about that, but it's the nature of the environment, you know, so we can't force trades. I know there's others out there, oh, this guy has 50 trades today. Okay, but, you know, over time, what is the outcome of that, right? There's no way I want to send out 50 trades and have 40 of them stop out, right? I mean, and then we brag about the 10 trades that didn't stop out. Oh, look, 10 trades, when they all reached their profit target. Right, thanks for the 40 stop outs. So, you know, just all I ask is for our current members, please be patient, you know, while this market tries to figure itself out. And once the market shows its hand and we can see opportunities that make sense, okay, from our perspective, you know, then of course, you should see more trades. Okay, so I just ask you for that patience right now, and that's that. So, and if you're new, just keep that in mind. I mean, we have these free trial people come in, they see nothing going on. Oh, this thing sucks. I'm getting out of here. Okay, but it's the nature of the market. So just something to keep in mind. Anyway, I want to thank you all for your participation. Thank you for joining me today on Thursday afternoon. Please enjoy the rest of the day wherever you are in the world, especially in Sicily over there. I'm so jealous. I'm just kidding. Enjoy the rest of your day wherever you are in the world, and thank you so much for watching.